What's going on, people? Back with a bang. This is the Money Management. Back here with another video for you guys today. So today is a different kind of video for you guys. I'm going to be explaining why you cannot be buying stocks based off what these stock gurus tell you on YouTube. I'm going to explain what they're doing wrong, what you're doing wrong, how you're getting yourself in trouble, why it's not going to benefit you short term or even long term. And I'm going to dive into all the details and explain exactly what you should be doing instead. But before we get into that, people, these videos do take a lot of time. Filming, editing, uploading, all of that kind of stuff. So please do drop the thumbs up. I definitely do appreciate it. Check out the Monday motivation from this week. We had so many comments and only a few likes within the first few hours. That's not good enough, people. If we have 50 people commenting, there should be at least 20-30 likes. And if there's 100 people commenting, we can't just be having like 20 or 25 likes. We need to boost that, people. So drop that thumbs up. It doesn't cost you anything, trust me. Also, make sure you guys comment on the video. You guys do a great job with that, so keep that up. And added to that, make sure you guys share these videos with your friends, help them get them out to more people, help more people understand why they cannot trust their YouTube gurus, they cannot trust their favorite YouTubers. And lastly, but most importantly, if you do want to join a new YouTube channel, hit the red button below and subscribe to the channel. We're trying to get to 2K subscribers by the end of March, so we've got just about a week left to do that. So please do click on that red button and join the Money Management. You'll see more videos like this. But for today's video, let's now explain why you cannot be buying stocks based off your favorite YouTube gurus' picks and explain what you guys can do instead. Because I need to break this down to you guys really simply, just from start to finish. You know what? To start off, let's just take the whole stock equation out of it. Let's say someone makes a video on 5 side hustles for 2021. Let me explain this to you guys. If they make that video, do you guys think that they are doing all 5 of those side hustles in 2021? I highly doubt it. Now let's relate it back to the stocks. Your favorite guru says 5 stocks which are going to blow in 2021. Does that mean they are buying those 5 stocks in 2021? No, it's just 5 stocks they're naming that could blow. They don't know that's going to happen. Otherwise, they'll dump all their money into it. So how does this benefit you guys? Why am I saying this? Well, just to highlight the fact that just because someone talks about stock pick, it does not mean they are actually buying that stock. What happens a lot of the time is those gurus or whoever they are, they'll realize, you know what, actually, I don't need to be investing in this stock. Actually, I don't really want this stock. There's a small percentage of times where they've been, paid to promote that stock, but I'd say mostly for the bigger YouTubers that you guys probably know, they're probably not paid to promote them. But again, it doesn't necessarily mean they're buying that stock or any of those stocks or all of those stocks purely because they made a YouTube video about it. They made that video just to show you guys. It doesn't mean they're buying those stocks. Now, let's talk about the amazing pump and dumps. You guys know about this. You guys have heard this term multiple times. So pump and dumps. Why am I mentioning this now? Well, often YouTubers will be short-term traders. And so what they will do is create a video or even spread news or read out certain news in order to get that stock pumped up. Little do you guys know, they've already invested in it, which we will discuss later on in this video. But yeah, they've invested in the stock. They need the price to rise so they can get some gains short-term. That can be penny stocks, that can be growth stocks. It's very rarely going to be value stocks, but it probably could be sometimes. But they'll put out a video, get 100 or 200,000 views within a couple of days. And what do you think happens to the price of that stock? It skyrockets. And if you don't believe me, just do what I did last month. Last month, I picked one YouTuber, I'm not going to say their name, but I picked a YouTuber, I watched a couple of videos, and I noted down 5 stocks in total. Short term, within the first 2 or 3 days, of course, all these stocks rose heavily. And it may be a coincidence, it might not be, I don't know. This was last month, so it was still during the bull market time. But the following week, down 10%, down 25%, down 30%. And I'm thinking, imagine I had put my money into that. Because I was actually thinking about it. Someone on Twitter had said, this person always has really good stock picks. So I thought, you know what, let me just check it out. Of course, short term, those stocks pumped up. What happened the following week? They got dumped off. And I would have been there looking like an idiot. And I'm sure many of you guys have been in that situation before. I've been in that situation before, not recently, but in the past. Listening to YouTubers and saying, you know what? Yes, I'm going to get that stock. And, short term is going to go up, and it does. But you're still holding it. Meanwhile, they've already sold off hundreds of thousands of shares. You're just there left with shares you don't even want to hold. You're there forced to bag hold. So again, remember that pump and dumps are very common amongst YouTubers all over the world. Doesn't matter who they are, doesn't matter where they're located. If they're mainly making stock videos, especially when it comes to penny stocks in the YouTube space, trust me guys, if they're getting 100, 200, 300,000 views, daily, you got to be aware of that. You got to be careful. Those YouTubers who have hundreds of thousands of followers or subscribers, there are many times they are involved in pump and dumps, so beware. Now let's talk about the amazing fact of the timing of the stocks, the timing of the investments. Do you know why, people? Because a lot of the time, if these investors, these YouTubers do invest in a stock, wow, guess what's happened, peeps? They announced that they're buying a penny stock, or they announced that this penny stock could blow. Meanwhile, it's sitting at $1.30, $1.40. Now you're getting there ready to buy it. You buy it at $1.30, $1.40, jumps up to maybe $1.50 or $1.60. The following week it's at $1.10, $1.90. And you might be thinking, man, I lost money on that. But I guess they did too. Little do you know, they invested in those stocks when they were at 75 cents, 80 cents, 90 cents. And meanwhile, they've taken profit when the stock did hit $1, $1.50, when they've doubled their money. They've gone away with their thousands of shares, hundreds of thousands of shares. And again, you're left there to look like a fool. I want to clarify, many of the times these YouTubers call out stocks and they want the price to rise. Even if the price doesn't rise, they have already invested in this stock a while back. They might see a little bit of fluctuation, they might see a bit of volatility, they might think this is a good time to make a video on this stock, it could raise the price. You guys might think I'm joking, but many times when you watch a YouTuber a few months down the line and he or she is like, oh yeah, I bought this stock at this price, and I'm like, wait a second. But when you made a video, it was already sitting at this price. And I'm thinking back, I'm saying, but now you're showing us that you invested here. So again, they've made a video when the stock was 110 or 120 or 130. Meanwhile, they had already invested at 80 cents, 85 cents. So when it does hit 140, 150, and you're there hoping that it goes to $3, $4, and you can all make a load of money. Well, they've already cashed out at 150, cashed out at 160, and ran off with their money. A lot of them are investors, but a lot of them also enjoy those short-term trades. So again, beware of that. Now for the fourth point I want to discuss in today's video. These YouTubers will actually make videos in order to increase the price of a stock so that they can profit. So what do I mean by that? Well, a lot of the time they are long-term investors as well as being short-term traders. So they're looking for some price action here. They're looking for something to happen so they can benefit from it. So maybe there is a stock sitting at $10 and they bought it for $10. They bought 1,000 shares for $10. So they cost them 10,000 bucks. They want the price of that stock to rise. They know that each video they produce daily gets over 100,000 views. They know they have a following of 500,000 subscribers across a huge platform, YouTube of course. They'll make a video, and once that video happens, a lot of people are going to start looking at this stock. A lot of people are going to start investing in this stock. That doesn't mean that a stock moves purely based off what YouTubers do. No, I'm not saying that. But a lot of people will start to fluctuate towards a stock, and a lot of people will start to put 10,000 in as well. 20,000 in. People will do that because they thought a YouTuber knows best, a YouTuber knows what they're doing, he or she has all the information they need, this stock is going to move and I need to make money. And like I mentioned, at the same time, the YouTuber does want the stock to move up. So they're like, let me make this video, hopefully the price of the stock will move up. Now how does that work? Well, stock prices are based off supply and demand. So how do we increase the price of a stock? Well, when there's more demand for a stock, the price will increase. When there are more people who want to buy the stock, the price will increase. So a YouTuber makes a video, gets 200,000 views, and maybe 50,000 people or even 30,000 people will go and start buying shares of that stock. Who knows how many shares? It might range from 1 share to 10,000 shares. But shares are being bought and the price of the stock is slowly moving upwards. We come back in a few days, the price of the stock may have increased by 50%. The stock has gone from $10 to $15. So the YouTuber who had $10,000 in that stock, and I'm speaking on the light end here, usually they'll have hundreds of thousands or even more than that. But yeah, the YouTuber who had $10,000 in that stock now has $15,000. Again, this is a conservative estimate, it's a very small example, but they've increased their money by 50% within a few days. Isn't that pretty amazing? Where else are you going to go in the world where you can get a 50% return within a few days? Well, again, if you make a YouTube video about something and you have a huge reach, a large following, a large fan base, it is a lot easier than you think. Now again, like I mentioned, these prices are based on supply and demand. They may decide to sell off their shares. They might decide to just keep their shares. It depends. But like I said, if they do want the price of stock to start moving a little bit, they might just make a video about it just to increase that demand, get a few more people interested in it, a few thousand more people interested in the stock, and trying to make some moves there. And you guys might think this really doesn't happen, but trust me, it does. There are a load of stocks out there. I can name tons of stocks out there that I know people have bought because of recommendations from certain people. And when more YouTubers recommend it, well, guess what? More people start fluctuating towards it. This is really a simple game for YouTubers, at least. If they do need a stock or price to move, they can make a YouTube video about it. Now, that's not me saying that it's guaranteed a stock price will move because of a YouTuber, but it does mean that more people will fluctuate towards the stock, start searching it, start reading about it, and a lot of people who don't even know about stocks will start investing in them. That is a simple fact. So I've mentioned many different points on why I say you shouldn't listen to YouTubers and why I said, investing in stocks, which they call out, is more for their advantage than yours. Now let me explain some things you can do, because you don't want to be out here saying, well, who can I listen to? Can I only listen to people with less than 20,000 subscribers? No, that's not the case. I'll tell you who you can listen to. Go listen to Warren Buffett, a long-term investor. Go listen to Ray Dalio. Go listen to Benjamin Graham. I forgot his name. The guy who wrote The Intelligent Investor, I think it is Benjamin Graham. But yeah, go listen to these kind of people. Listen to what they said. Read more about their insights. Because when you listen to these kind of people, you understand a bit more about your investing and why it's also important to focus on the long-term game, which is my next point, the long-term game. When you're going to invest in stocks, it's not always about the quick money. It's not always about the fast money. You know what? When you look for that fast money, when you look for that quick money, that short-term money, it's a good way to lose money. That's what it helps you do. Looking for the quick money, looking for the short-term money, those short-term gains, it will help you lose money fast. That's not what you want to do. And I'm sure that's not what those YouTubers intend for you to do. I'm sure they're more focused on what they can get out of it, not you losing money. But you're putting yourself at risk by listening to people who are YouTubers at the end of the day. They are YouTubers at the end of the day. A lot of them are not financial advisors. There are a few that are financial advisors. But again, at the end of the day, they're YouTubers. Warren Buffett is not a YouTuber. This is a real investor. Ray Dalio, this is a real investor. These are the kind of people you can listen to because they have proper insights into the market. They're experienced. They've been there long enough. And again, I'm not saying that the YouTubers are not experienced and not been in the market long enough. I'm not saying that. But they have a different impact on stocks. They have a different perspective on stocks and what videos they make about stocks based on their audience. You have to remember that. Warren Buffett doesn't care about an audience when he's speaking about stocks. He doesn't need to go out there and say, hey, check this penny stock, check this pharmaceutical stock. This is going to the moon. He doesn't need to say that. You're never going to hear him say that. He'll give you real financial tips, long-term investing tips, and tips which will help you in the market long-term, not just making that short-term money, long-term. So stop looking for the quick fix, stop looking for the short-term money, start focusing on a long-term game. Trust me, it is much more beneficial to you, and no YouTuber can impact you in that way. You have to be careful here, people. You have to protect yourself. I've seen it multiple times. I've been a victim of it. I know that many people who have suffered from it. They're getting in there earlier than you. They're selling before you sold. They're creating a video right before it hits the highest. You're buying at the high point. They're selling off. The stock's cooling off. You're losing money. It's a simple cycle. It's a simple process, but you need to be aware of that. I've created this video purely for awareness, not to hate on any YouTubers, nothing like that. I've not called anyone out. This video is purely for awareness because I've suffered from it. I've again come back this year and tried to just look, and peep what's going on, and I've seen what's happening. And so I'm just putting this out there for my small reach, my subscribers, so they do see it. I don't want you guys to get hurt. I don't want you guys to feel upset because of, you investing in something that someone else invested in or you thought they invested in, which they didn't, or whatever situation it might be. Just be careful and do what's best for you and your pockets. It is your hard-earned money at the end of the day. Never forget that. No one else's. And if you lose that money, no one else is coming to save you. No one's coming to help you. So remember, you've got to do what's best for yourself first. As always, I thank you guys so much for the support, the continued love. Keep that going. Do please check out my free Discord. We talk about stocks there. If you want to join a group of people who just discuss about stocks daily and enjoy ourselves and have fun, please do join the Discord. Free. Links in the description. Also, make sure you guys check out my stock option starter pack. That is more for short-term trading, and I analyze markets real time. I show you guys how to do that. Again, that will help you focus on your own picks, not anyone else's picks. So yeah, go check that one out. Lastly, I want to say, make sure you subscribe to the channel if you're new around here. Help us continue to grow. Help me continue to stay enthusiastic and excited to make more videos. But you guys know I love doing it. It's not easy, but we make it happen. Thank you guys so much for watching today's video. Again, protect yourself, do what's best for you. I go into making, you got your own research to be doing. See you guys next time for another video. Peace.
Game over.